What's up, guys? Jay Martin here. This is part 2 of my interview with Mark Moss, the investor, entrepreneur, and host of the Market Disruptor Show. In part 1, we talked about trust in media and censorship and a lot of the hot button current events. In part 2, right now, we're going to jump into Mark's outlook for the next decade, why he feels like we're entering a period of mass challenge and volatility, but coming out on the other end is the land of abundance. And to be honest, I agree with him. We're going to go through some hard times, but long term, I'm an optimist, and we get into why. So, 3 things before you jump into this interview. Number 1, all the ad revenue from this channel is donated to an organization super close to my heart called Zero Ceiling. Zero Ceiling's mission is to end youth homelessness. They do this by giving at-risk urban youth the opportunity to relocate to beautiful wilderness areas and then provide them with supportive housing and career training and a whole bunch of good stuff. Number 2, I publish a weekly newsletter. I love writing it. I share all my takeaways from interviews just like this and anything I'm paying attention to. You can subscribe by hitting the pinned comment right beneath this video. It's free and I publish every week. Number 3, if you prefer to listen to my content as opposed to watch it, you can find me wherever you listen to your podcast. Just search for The Jay Martin Show. Here is part 2 with Mark Moss. Enjoy.
This is Jay Martin.
Now, I want to think a bit or speak a bit bigger picture with you, Mark. Looking at some macro trends and I guess how you're planning for the future.
Yeah.
Here's what I'd say is that I interview a ton of people on this show and I hear from the sort of doom and gloom, the sky is falling, hide, run and hide, get your bug out house and get it ready. And then, the polar opposite of that, which is, yes, we're going through some tough times, but we're actually moving towards a world of abundance and the future is beautiful, right? And I usually find that there's like maybe a precious metals background on the dystopian outlook and a technology background on the utopian outlook. Now you straddle this, right? Because, on your show, you cover finance, politics, technology. You've got a background in hard asset investment from precious metals and real estate, but you're one of the voices that made me turn my head and look a lot closer at Bitcoin. And you speak a lot about the solutions that are coming on the back of this tech. So, talk to me about your 10-year outlook, Mark. Are you an optimist? Are things going to get better?
So both. So I'm bearish 5 years. I'm bullish 10 years.
Okay.
So I believe there's a lot of work I've been doing on these 3 revolutionary cycles that are all converging right now. So there's a 250-year political revolution cycle, which I already kind of talked about. There's an 80-year financial revolution cycle, and there's a 50-year technological revolution cycle. And all 3 are converging at the same time right now. So a lot of people want to know, like you guys got the Hong Kong truckers are going on up there, right?
Yeah.
There's protests going on all over the world.
Yeah.
And they're protesting mandates or supposedly or vaccines or, and a couple of years ago in Paris, it was the Yellow Jackets and supposedly they were protesting this new gas tax. And in Hong Kong, they were protesting China, like whatever, right? And it's all black swan, right? This is all black swan, right, Jay? Like, who would have ever known that a virus would have come? Like, no one could have ever guessed that. Well, no, it's not a black swan. As a matter of fact, history tells us that this would have happened because every 250 years, we have this uprising, this political revolution that happens. And so there was already, before the pandemic happened, there was 10 countries with over 1 million people each in the streets marching before the pandemic. So this is not about the pandemic. This is about centralization over government overreach. It's gotten too big. And so we're pushing back on centralization to move to decentralization. At the same time that's happening, on a 50-year time frame, there's a technological revolution happening. So a technological revolution is different than a technology. If new technology is like Uber, that's cool. Like I used to have to call a yellow cab, now I call a black car, whatever. iPhone, right? I used to have a regular phone, now I have an iPhone. Cool. Those are new technologies. A technological revolution is something that changes the course of humanity. It changes the way the world works. So there's been 5: industrial revolution, steam engines and railways, steel and electricity, oil, automobiles and mass production, and telecommunications, microchips or microprocessors.
Okay.
Those all changed the way the world worked. For all of humanity, people walked and rode horses, and now there was cars. Wow. Changed the course of it. For all of humanity, we had candles, and now we have electricity, which was more than candles, obviously, right? And so they changed the course of humanity. And so that happens on a 50-year time frame. So at the time, on a 250-year time frame, when the world is rejecting centralization, it's moving to decentralization. We have a technological revolution that's giving us decentralized technology, Bitcoin, which is pretty amazing. And then on an 80-year time frame, we have a financial revolution that's happening. So there's like an 80-year long-term debt cycle. So 80 years ago was the Bretton Woods Agreement, which is the entire financial system of the world got reset on a global financial system, on a gold standard, which was, on the dollar system. And now the IMF, Kristalina Georgina, is calling for a Bretton Woods 2. That's her words. Bretton Woods 2. So if Bretton Woods 1 was resetting the global financial system into a new currency, one world currency, what is a Bretton Woods 2? Resetting the global financial system into one world currency, right? And so we know that central banks have, two tools, which is interest rates and monetary supply. And interest rates are at zero or negative in most parts of the world. Monetary supply, they created $20 trillion in the last 24 months. There's been over $300 trillion of debt created in the last 50 years. Like it's done, right? So if you're playing a game and you're out of moves, you reset the game.
Sure.
And so we have all three of these things happening right now. And I say that because that sets up where we are in this next 10 years. So you asked about the next 10 years. So all of these cycles are converging right now. Now, just like spring is a day on the calendar, it doesn't mean the weather changes that exact day, right? It's plus or minus. And so these cycles are all converging around 2023 to 2026. So 2025 is kind of the date that I'm looking at. I think that things will continue to get worse for the next couple of years, meaning when I say worse, I mean more MMT, more modern monetary theory, more money printing, more interest rate manipulation, more centralization, more pressure and squeezing from the governments, trying to get us tighter and tighter and tighter, because what they're doing is they're trying to hang on, just like the Protestant Reformation, the church tried to hang on. It's inevitable what's happening, but it's their it's the only thing they can do is try to hang on. As I already laid the case with the internet plus Bitcoin, what the future holds is inevitable. They can kill as many people as they want or deplatform. It's not going to make a difference. So I think they're going to continue to squeeze. They're going to continue to print more money. And then it's going to break. Now, and then from there, I think then things start getting better. And I would say by the end of the decade, I think we'll see the end of the giant nation state. Things are going to be much more free, much more open. And I think there's massive hope and prosperity for our kids. I'm a huge bull on that. I think we'll see the biggest boom that we've ever seen since the 1500s. And there's a couple of reasons why I say that. But before I do, let's dig into these next couple of years. So, what I think is probable to happen, and this is my opinion. This is speculation. I don't have a crystal ball, so take this for what it's worth. But here's what I see is happening. So, as I said, interest rates are at zero or negative. Monetary supply is printed. They can't do anything with it. And not just the United States, but really in the world. Canada is even probably in a worse situation. Europe is in a bad situation. China's in a bad situation. Where if they don't continue to stimulate the markets are going to crash. But if they do continue to stimulate the markets, inflation is running away. Now, in the past, they've been able to fight that by raising rates or things like that, but you can't do that in the condition that we have today. With the amount of inflation that we have and so forth. So they're really stuck between a rock and a hard place. Now we've seen like the ECB and China, they're like, we're not raising rates. As a matter of fact, we're lowering rates. The US is trying to raise rates. It's a very dangerous situation. There's a third option that I think is much more scary, and it's the one I think most likely to be taken. And so what is that third option, specifically in the United States, but I think we'll see it in most of the developed world, is that what we do is like, if I continue to stimulate, inflation runs away. And if inflation runs away, the people are going to be very unhappy. So what we're going to do, we've seen this in the United States, I don't know about if you've seen it in Canada, but Senator Elizabeth Warren came out on Thanksgiving and said, these greedy turkey companies charging way too much for turkey. I'm going to launch an investigation as to why these turkeys are so expensive. President Joe Biden said, why is gasoline so expensive? I'm going to go start an SEC investigation into why gas prices are so high. What they're talking about is price fixing. What they're talking about is, well, if prices keep going higher, what we should do is cap the prices so prices don't go up anymore. Now, this isn't the first time the United States has taken it. As a matter of fact, the United States has not only taken it, but every nation at the end tries price fixing. And of course, it doesn't work. And so what I think is probably going to happen is through what I call just job owning, just talking about it, the Fed is we're going to raise rates. We're going to taper. They haven't done anything yet. They announced it in November. They haven't done anything yet. And yet the markets have sold off. Right. They haven't even done anything. All they've done is said something, right? So they can continue to talk like this They're talking about reorganizing the CPI basket. So they'll change the way inflation is calculated. So for example, home prices in the United States are up an average of 35%. Some states are up, and some states rents as high as 60% up, 60% up in some states. It's an average of 17%, but yet CPI only called it like 3.5%. And that makes up 25% of the CPI basket. If they would have put it where it really is, inflation would be way higher than 7%. So they'll reorganize the CPI basket to bring that number down, and they'll start capping prices on some things, and they'll combat it that way so that they can continue to stimulate without crashing things. Now, some of this is like, can they really fix things this way? Can they really keep the markets from crashing? But I think that assumes a bias that they want to keep the market from crashing. What if they don't want to keep the market from crashing? What if they only want to keep the market crashing until they're ready for it to crash? What does that mean? Well, back to, they're calling for a reset of the financial system. If you're out of moves, you reset the game, right? So they have to reset the financial system. So what if they're only trying to keep it going until they're ready for the reset? But what does that mean? Why would they be ready? Well, they're not ready yet because the next move is central bank digital currencies.
Right.
We've heard it directly from the BIS, right? We know China's already rolled theirs out. We know the US, the Fed is working on them. Most countries, as a matter of fact, the Fed's kind of behind on it. Most developed countries are already pretty far along with it. And so there's where they're really trying to go. And there's a lot of, I'm trying to pack a lot into a little here. If you look back, remember, technology changes things, and they've lost their grip, just like the church, and they're trying to hang on. The only hope they have is full censorship and control. So really what they're trying to do is get our lives into this. The nations have started using something called what they call freedom as a service. So that means that, Jay, you weren't born free. No. If you do what we say as a good boy, then you get freedom from us, freedom of service. And so they want us to be able to show this device to gain access to freedom. So if you get your vaccine, then you show this. If you use a digital ID, then you can gain access. If you use a central bank digital currency, then you can get access. And all that is for control. I don't think this is controversial or conspiratorial. I mean, like I said, we see the central bank digital currencies coming. The BIS has already called for it. And so we see lots of talk lately about a cyber pandemic, a cyber attack. Russia's been doing cyber attacks on us. And just like before the pandemic, they did like a war game on what a pandemic would look like and how they would navigate it. They also have just finished one done on a cyber pandemic as well. Okay. And I read the paper, and what it said is that in a cyber pandemic, they would guess that the attack would be on the financial system. And what they would have to do, and actually Klaus Schwab made a video about this. Klaus Schwab that said that if you can look it up and you can put it in this video, edit it. But he says, the internet has a virus, and we must vaccinate the internet. And in order to do that, we will shut the internet down. That's what he said. That's his words in his accent. But in this paper, what they said is that there'd probably be an attack on the financial system. And they said what would have to happen is we'd have to have a, quote, this is their words, quote unquote, bank holiday. So a bank holiday is done in 1933 when they seized the gold in the United States. They did a bank holiday. When they opened up the bank, no one can get their gold out. In Cyprus, when they did the bail-in, they did a bank holiday. Right. In Greece, when they stole the money, they did the bank holiday. So what they said is they'd shut the banks down, they do a bank holiday. So there's all this talk about a cyber pandemic. They could do this bank holiday, shut the banks down, and then they could say, hey, you know what? The internet's not safe. Like, these guys took the whole internet down. Now, in order to be safe, everyone should use a digital ID. Everyone needs a global ID now. No more anonymous users. It's not safe. The financial system got wrecked. It wasn't our fault. Like, these guys took it down. Sure. So now we're going to roll out a new central bank digital currency. So the dollars that you have in your account today, we're going to credit you 1-to-1, but now it's a new central bank digital currency. Right. Right. But they would need some sort of an event to get that to happen. I'm estimating it's going to take anywhere from 12 to 24 months to get that ready to go. Just based off and I come up with that just based off the time that it's taken China to roll theirs out through the test phases that they've done, where the US is with theirs already. So they put it up for comment, I think 3 weeks ago. So like it's getting there pretty close. So maybe it's 12 to 24 months, probably closer to 18 to 24 months before that's ready. So that puts us at 2024, right? 2024, 2025. So maybe they keep this game going a little bit longer, kick the can down the road until they're ready to reset the game. have a problem, switch everybody to CBDC. I know that's a lot of opinion.
Well, but it also, you can follow the thread, right? And you can look at past trajectories and make a logical assessment that we are very likely headed to some version of that, right?
I think it's an indisputable fact that the governments are working on central bank digital currencies. That's fact.
Yes, right.
It's also fact that the IMF called for a Bretton Woods agreement.
Sure.
It's also fact that the 80-year long-term debt cycle is due and there's not much ammo left.
Yeah.
Those are facts. It's just a matter of when, really, that we're speculating about.
So where that lands me, though, Mark, is that lands me in dystopia, right? It lands me in a place of currency as a surveillance tool and a control mechanism, right? Everything you just said, right? Like you could be rewarded or disciplined on behavior, and that may affect your bank account, or just basic controls like we want to stimulate this part of the economy, not that one. So you actually get a premium spending money over here, but a discount spending money over there. Yep. And easy to stimulate the economy. You just put an expiration date on the digital currency. We know all this, right? Like maybe your cash loses 10% of value every 2.5 months.
Well, just look at what happened with the GoFundMe for the truckers, and you can imagine what a central bank digital currency world looks like.
I bet they wish they used Bitcoin for that right now.
Right.
Yeah. Okay. So, but let's bridge the gap then, because so I'm with you, by the way. I'm based in Canada. My wife's American. My kids have dual. We're constantly looking across the border and deciding, what's our line, right? Before we'd actually pick up and leave. And, 3 kids, it's a big consequential move. But in the last 8 months, I've been to Louisiana, Texas, Arizona, Idaho, Montana, Oregon, California. What I love about the US is the sovereignty of the states, because every time you skip a state border, it's like you have a completely new risk management policy. Right.
Yeah.
And it's almost like you're in a new country. So you really get to choose your own adventure, and, we've got family in various pockets and all this. But what I told her, because she's more keen to move south than I am, I just said, look, it's too soon to call it. Like we don't know what any of that's going to look like in 2 years, and so it's too early to make the jump right now and say it's going to be better down there, because I think like it's a good 8 years away, 10 years away. I think 2030 before things maybe begin to settle. So walk me through that, because you walk me through until, peak volatility, but you're still an optimist. So how do you get there?
So that's kind of the next couple of years. And that's why I'm bearish. I think they're going to continue to manipulate the currencies. They're going to continue to inflate the currencies. I think they're going to continue to squeeze politically. So that's why I said I'm bearish for the next couple of years. I think things will continue to get worse. I think by 2025, things break. And so what's happening is Newton's third law, right? Equal force has an equal and opposite reaction. And so the more they squeeze, the more people push back. The more they push, more tech is developed to be dissident tech. The more they squeeze people like the truckers, the more people are going to move to something like Bitcoin, right? They're doing the marketing for us.
Yeah,
right?
100%.
And so they're proving Bitcoin's use case. They're proving the need for Bitcoin. They're putting it on the map. Thank you. Okay, so the more they try to push, the more they censor, the more trust they lose. The more they try to squeeze, the more entrepreneurs fire back and find ways around. The more they try to censor our money, the more attention it brings to things like Bitcoin. And so all they're doing is speeding up the inevitable. If they would just roll back, I'm back to Canada, and I don't want to dig deep into that, but all those truckers are saying is like, just drop the mandates. Right? Like, you want this to go away, just drop the mandates. If the leaders would just roll back to the way things were 2 years ago, everything could just settle down, but they can't. They can't at this point. And so it's only going to escalate. So that's what I think happens the next couple of years. Then I think it breaks. And so what happens is, by moving to Bitcoin. And so first off, as I said, the internet's already pretty decentralized, right? BitTorrent, they can't stop BitTorrent, right? It's the money that we have to fix. And so Bitcoin is that money. And so once I can become self-sovereign with my money, then it gives me lots of options. So I talked about how the internet allows me to move around. You're talking about maybe moving from Canada to the US. Maybe you'd want to go all the way to Mexico. Like, who knows, right? But you have those options, because as long as you have an internet, you could continue to do your job.
Yeah.
But not if they take your money. Right? It's all about the money. So Bitcoin unlocks that, but it does two things. One, it allows me to pull my money out to be self-sovereign, but it also defunds their initiative.
Right.
So what happens is, if you and I were having a party, or let's say I was having a party and like, hey, you guys, you're being too loud, do this, do that, whatever, right? I can control you. You're at my house. But if I kick you out and I kick them out and I kick them out, eventually I kick everybody out of the party. I'm the only one left. And now who can I control? No one's at my party anymore, right? So as we all start to exit the existing financial system, they don't really have as much control over us anymore.
Sure.
And so I think this really climaxes by 2025. That's what the historical cycles show. If we look at one way that you measure technology is something called diffusion of innovation. It's like this bell curve, and it's like the innovators, the early majority, the late majority. You've seen that before.
Yeah.
And then on that, you measure technology adoption through an S curve. Mm-hmm. And so if you look at, color TVs or telephones or internet, you can measure it all with the S curve. Yeah. And the way an S curve works is that the time it takes to go from 0 to 10% is the same amount of time it should take from 10 to 90%. And so Bitcoin reached 10% adoption in 2019, which means by 2029, we should be at about 80 to 90% adoption.
Yeah.
Based off S curve, which is, pretty
And we're
lively.
on track, by the way, if you look at growth from 2019 to today. It's matching that curve.
So I think 2025-ish, 2024 to 2026 is the climax. I think that's when things really start to then turn for the better or the worse. If you're the state, better if you're the individual. Meaning that we'll be able to get much more local jurisdictions. We'll be able to move to different areas that we like better. Things will start to be much more open and free for us and things like that. And then I think by the end of the decade, by 2030, I think, like I said, I think we'll see the end, at least the signal of the end of the giant nation state, and much more freedom that way. In the United States, we can see we're at this precipice where, President Biden put these mandates in, federal vaccine mandates. 26 states sued and said, nope, we ain't doing that.
Right.
Governor DeSantis in Florida and in Texas, they said, hey, you businesses, you can't come here to our state. Ain't happening, right? And then we saw this last week where President Biden put out an announcement that he's going to do an executive order to regulate cryptocurrency. Okay. We don't know what the announcement is yet, but we're going to do an executive order and we're going to regulate cryptocurrency. At the same time, the Treasury also put together a bill to give them unlimited funding to fight cryptocurrency.
I didn't know that.
At the same time, Texas and Arizona put bills in to make Bitcoin legal tender.
I saw that.
So the states are like, the federal government's like, hey, we're going to do this. And the states are like, screw you. You ain't doing nothing. Right. So we're seeing those are lines in the sand. I mean, those are fighting words, right? Like those are lines in the sand. How do you back down from that? Right. So that's what's going to continue. And I think, like I said, I think things get better through the end of the decade. And by the end of the decade, I think we'll be bullish. Now, I did say that I think we'll see the greatest boom of prosperity the world's ever seen. And the reason why I would say that is two things. If we go back 500 years, so we have to look at these long lenses. So what happened is, and if we jump in 500-year timeframes, because these 250-year swings, the pendulum swings like 250 years like this, so it's like 500 years round trip. So at the end of the Roman Empire, in 1000 AD, and then we had 500 years later was the Protestant Reformation. Now, what happened at the Protestant Reformation, a couple of things happened. There was two catalysts that I think are important. One being the printing press, which we talked about, decentralized information. The other thing that happened is in Florence, we got the florin, which was the gold coin. It was the longest lasting gold coin that went, I think, almost 400 years without being debased. And what that did is it allowed free trade to flourish globally. And when free trade was able to flourish globally, because we had a sound money that everybody could recognize, everybody could treat freely, it allowed for more specialization. And more specialization plus more information from the printing press had an explosion of ideas, an explosion of creation, which what led to the Renaissance age, the Enlightenment age. It was the greatest explosion from the 1500s until, really the 1900s that the world had ever seen. Mm-hmm. Right. But then we got the central banks. We started debasing the currency. We got the giant nation state and things have kind of slowed down. But we're seeing, and what happens is on a 250-year time frame, we go from a creative cycle, 1775, the industrial revolution, and it swung back to an analytical cycle. Here we are now about to swing onto another creative cycle, and we have the same two catalysts. The printing press, decentralized information, the internet, decentralized information.
Sure.
The florin was the longest lasting currency without being debased, globally recognized. Bitcoin is a currency that can't be debased and it's global recognized.
Okay.
And so we have both of the same catalysts at the exact same pendulum point swinging towards creativity. And so once we get on the other side of the giant nation state, that limits our ability to create, to produce wealth, right? Wealth is goods and services, right? I need to be able to create goods and services to create wealth, right? Money's not wealth. If you and I were stuck on a desert island with $1 billion of cash or $1 billion of gold or Bitcoin, it's all worthless unless we have goods and services to buy. But like in LA, I don't know how it was in Canada, but like, dude, here in LA, I can't start to start an ice cream shop would take me a year of paperwork and red tape to get through. Like I'd never make money back on that. I can't even build a shed in my yard without going through a year of city planning, right? And so that all that does is stifle things. The nation state has gotten too big. So once we break on the other side of that, we get freedom back. We have both the explosion of information, the internet, and the money. I think we'll see an explosion of new ideas and new creation that the world has never seen. It'll be like the Renaissance. I call it Renaissance 2.0. It's Renaissance times 1,000.
I love that. Okay. Now talk to me about what you're doing today then to prepare for that, Mark. Like, how are you positioning yourself? I know you got young kids, so you're thinking about that. You're thinking long-term.
Yep.
I know you bought a ranch in Texas recently. Yep. I've seen you down in El Salvador, checking out Bitcoin Beach. I thought you had moved to Puerto Rico, but you're back in LA. So talk to me about your personal situation, your personal wealth portfolio, how you positioning yourself.
So I see all this prosperity on the other side, but I see trouble in the short term. So the answer is, how do I hang on to what I have so that I can get to the other side, right? Where it's going to be worth a lot of money. Now, I'm old enough to have lived through a couple massive crashes. I referenced the 2008 financial crash. I lived through the dot-com crash. I started my career at the end of a previous real estate crash. And so I recognize that a lot of money is made on the backside of those. Right. And so the first two I did pretty good on. The 2008 one, unfortunately, I kind of got wiped out and I didn't really get to take full advantage of coming out of that. So I've learned my lesson that way. So how do we keep our wealth in a way that we can be positioned on the other side of that? And so a couple of things that I think of. One, first off, is the world's very uncertain. And so how do we beat uncertainty? We do that with optionality. So the more options I have, the more certain my future can be. So I think about my wealth, but I also think about my health being wealth. I also think about my freedom as an asset, my health as an asset. So you mentioned I've been down in El Salvador. So I've built a nice community down there. I have another really good community in Mexico. And I'm building a house in Mexico right now. I just bought a 12.5 acre ranch in Texas as well. So, and I have a house here in California. So I have options. So if California were to get too crazy for me, I can go live in Texas on a ranch with gun-toting, steak-loving, freedom-loving people, right? Sure. And I can have that if I need to make a stand there. If I want to get out of the United States altogether, I can just bounce down to Mexico. Right? I've been establishing for years good communities down there. I know people, I know all that. Or I could even go to El Salvador. I don't have a house there, but at least I have a community of people that I could go plug into right away. Right. And so I have those options. A lot of that starts with the money. So first thing is I have to have my money in a way that I can take it with me. So my bank account could get frozen at any time. I can't take my real estate with me and I can't carry my gold with me. I can take my Bitcoin anywhere. So as long as I have that, then if I can't be in Mexico or El Salvador, maybe I can go to Poland. Maybe I can go to St. Bart's. Maybe I can go to Cayman, like whatever. I have all these options because I have money. So that's what opens that up. Now, about the money, what am I going to do with my money? From an investor standpoint, I talk about macroeconomic things and investing money. The way that I kind of see things is that, as I've already kind of laid out the case, I think that we have more money printing ahead. I think that the Fed, the central banks are job owning. As I said, they're pretending to do something they're probably not. I think that we'll continue to lose purchasing power, and which means we'll continue to see asset prices continue to rise. So I am not super heavy cash. I'm a little bit heavier cash than I was a year ago. But I'm not in a lot of cash. Probably right now it's about 25% cash. It's not enough to worry about the debasement that much, but it's enough to give me peace of mind and scoop up some deals if they come. Yeah. I'm not big into the stock market. I don't think the average person should be. I think that's all commoditized. You have no edge there. I like to look at it as I like to look at businesses that earn. So I have money in what I've been doing is I've been out of real estate for quite a while. Recently, in the last year, I've started acquiring more. So back to the ranch. I got a ranch. I picked up a couple of properties that are putting into rental properties. I've locked in like 30-year debt at 3% interest on. And so that seems like a really good long volatility play to me. Locking in, I mean, they're saying CPI is 7%. We know inflation is really probably more 15 to 20%. I think it will continue to be that way. I look at that based off of the money supply increase. Yep. I think the Fed will have to continue to increase the money supply, not just the Fed, but all the central banks of the world. And so if I can lock in 30-year debt at 3% and they're increasing the money supply by more than 3%, which I'm pretty sure they will, I feel pretty good about that. And then those properties make good cash flow. And if I need to, I can go live on them and eat the cows and the chickens and grow my own food if I need to. So I'm doing that. Obviously, a lot of Bitcoin. I look at Bitcoin as an investment, but really it's also a savings tool. So kind of like gold would be looked at. Sure. If you looked at gold, you might look at gold as more of like a store of value, as like a savings vehicle, and you would look at miners as more of like investments. Yeah. And I think if I was looking at the cryptocurrency space, I'd look at it probably the same way, where Bitcoin is really that store of value, that savings. And if I want to speculate with some cryptocurrencies, maybe I'll do that with a little bit just kind of for fun. But really that Bitcoin is like that gold. It's like my savings, right? That and then business. And so businesses is where I spend the majority of my time focusing, as I'm sure you do as well. Most investors do. You take the best investors in the world, the Warren Buffett's works, man. He has a company called Berkshire Hathaway. Ray Dalio, he has a company called Bridgewater Capital. Like the best investors in the world are actually working. Right? They're not just investing, they're working, they're creating wealth. So I focus on that, creating wealth. I take that wealth that I create and I invest it. I'm locking in long-term debt, long volatility, cash flowing assets, storing quite a bit in Bitcoin. And that kind of rounds it out.
Yeah. I mean, you hit on one data point that most don't, which is cash flowing businesses, right? Yeah. And whether that's, multiple streams of income, but the most overlooked in conversations like this, I wonder why that is, because you're absolutely right. And it's where I spend 70% of my time, right, is on my business, whether that's the events or the media. And
I'm sure Ray Dalio and Warren Buffett do as well, as do I.
100%. Yeah. It's not as seductive as, the big win in the market. Maybe that's why it doesn't come up in conversation, because it's the behind the scenes grunt work that, is required. Look, Mark, it's been awesome having you back on the show and catching up. Where is I don't know if you want to disclose this, might be your bug out house, but whereabouts in Texas is your ranch? You don't have to tell me.
I'm about 30 minutes outside of Austin.
Okay, you're close. Like towards San Antonio. Which direction are you?
It's west.
West. Okay.
West of Austin.
All right.
Yep.
We were looking at
what they call the Hill Country.
The Hill Country. All right. Sounds like cowboy country. We were looking at
offline I can get you more info on that. But it's beautiful. Austin is it's become a pretty big hub, right? It's kind of Bitcoin central of the world right now. And it's also kind of marketing central, right? You got the Alex Jones and the Joe Rogans and whatnot that have gone there. Yeah. So from a business standpoint, it's really good. From a sovereignty standpoint, I think Texas is in the best case to be the most sovereign state of the nation. Yeah. From a whole lot of reasons. There's no snowboarding and there's no surfing there.
That's right. Yeah. But you're not too far away. We were down there. We were looking at Austin ourselves. For me, it was like a town of a city of 1 million people. I just can't do it. Like I live in a town of 20,000 people and I love it. Right. Yeah. I'm 45 minutes outside of downtown Vancouver, so I can get there. But
I'm not a city person either, which is why we chose to get out there. Yeah, it's a small town out there, and you're 30 minutes into town if you want.
That's lovely.
Yeah,
the perfect mix. Okay, man. Well, I appreciate your time, Mark. It's good catching up. Thanks for your insight. I'd love to do it again.
Yeah, thanks, Jay. Thanks for having me. It was a great conversation.
All right. Okay, guys, 3 last things. First, if you enjoy my interviews and would like a bit more, you can subscribe to my Friday newsletter. It's free, and the comment to subscribe is right beneath this video in that pinned comment. In this newsletter, I share my key lessons learned, takeaways, and any actions that I might be taking in the market as a consequence of what I've learned on the show. Second, when I started a YouTube channel, I never anticipated generating any advertising revenue, but coincidentally, I do now.
which is awesome. And so what I've decided to do is donate this to an organization that is very close to my heart called Zero Ceiling. Their mission is to end youth homelessness. The way they do this is by providing young people experiencing homelessness with supportive housing, employment, professional support, life skills, and outdoor adventure. Because often young people in urban centers with no resources will never get the opportunity to experience wild places, nature that can be so transformational, and absolutely was for me. Third, if you prefer to listen to my content, you can now find us wherever you listen to podcasts. Just search for The Jay Martin Show.